My name is Darren Joseph from HTJ.tax. We're the team that seeks to demystify the sometimes confusing world of cross-border taxation for private clients. And today we have the honor and the privilege of having a conversation with the one, the only Leonardo Marquez dos Santos. Leonardo, please, could you introduce yourself?
Thank you very much for having me, Darren. I'm a tax lawyer based in Portugal, partner of Miranda & Associates, also tax law and international tax law professor here at Portuguese Catholic University. That's it.
Wonderful. So generally speaking, in the U.S., estate planning is, it's a big part of the conversation in terms of, dealing with family finances. And the estate planning tools that we look at in the U.S. aren't necessarily around tax optimization, but it's really about asset protection and succession planning. So we want our assets to go to certain members of our family, some kids over others, spouses, whatever the case may be. What are the typical estate planning tools that would be used from a Portugal perspective?
I'm not really an estate planner, so I would definitely gather my team together and use some that is used to deal with inheritance and family issues. But I would say that I think the law that will apply will be the law of nationality. So some of these issues some of the planning that you're doing in the US will still, I would say, apply here. We have very strict inheritance rules that result from our civil code. We cannot do whatever we want to our assets. There is a portion of the assets that are you can leave in a will to whomever we want, but a portion of it has to be to your kids. They can refuse it or accept it, but I have to leave them to them. So it's not 100% free of what we do with the assets. But I would say, first of all, it's always very nice to speak with you, but it's very nice to listen to what you're saying about. Most of the times it's not about tax planning, because that's also the experience that I have. What I with people from other nationalities, tax planning may be a bigger trigger than from people from the US. And generally what I hear is something along the lines of, I want to pay taxes, I just don't want to leave a tip. I don't want to overpay, but I don't mind paying my share. And in terms, then I think Portugal will be a very friendly country from the taxation of inheritance, because we have a territorial system. We don't have inheritance tax, first of all. We have stamp tax. Stamp tax is sort of a pouch where we put everything that doesn't belong to any other place, or so we tax financing, we tax collateral, we tax gambling. In stamp tax, also we tax inheritance. But for once, the stamp tax is very territorial. So if you have your assets outside of Portugal, there shouldn't be any taxation. That's sometimes very interesting for people that move to Portugal and that have like a portfolio of assets spread around the world, and they're not really concerned about the impact of taxation in Portugal, because at the point they move to Portugal, they will have some assets here, but not the majority of it. So it's fine.
Right. So this applies, before we move. So this would apply even though someone stays long enough in Portugal and perhaps they naturalize and they become a dual citizen, so they have a Portugal passport, still their assets back in the US won't be subject to any sort of, when they pass away. It won't be subject to the forced heirship rules that you mentioned earlier, nor would it be subject to any stamp duty. Am I correct in saying that?
The inheritance, I would feel more comfortable if we could confirm with an expert of that area, but I would say it's law of nationality. But from a tax standpoint, I just opened the provision in my right screen. So you will be taxed on free transfer. The law says it's on free transfers, and if you inherit is a free transfer, it's not a transfer for consideration. You will pay tax if the assets are located in Portuguese territory. So if you have real estate here, if you have mobile assets registered here, so if you have your car, and that will be taxed, but that will be negligible in the great scheme of things. You have shares if the acquirer has domiciled If the company is registered in Portugal and plus the acquirer has domicile in Portugal, so if the heirs are outside of Portugal, even if you have a company here, it won't do that. Yeah, and if you have money in bank accounts in Portugal, okay. So if you leave most of your assets outside of Portugal, you should be fine.
Gotcha.
And plus, there is an exemption on inheritance if your heirs are either your descendants or your ascendants. So if you leave it to your kids or to your parents, there won't be any taxation because there is an exemption. So like let's say two layers of comfort. First of all, exemption on descendants and ascendants. Second layer, a big chunk of your assets will be outside of Portugal, so there won't be any inheritance tax. So that's not bad.
That's good to know. So in terms of domestic assets and the domestic to Portugal assets and the forced heirship rules, are there ways around that? So for example, I guess a conversation would need to be had perhaps around gifting, because perhaps they could be gifted before you pass naturally, potentially. I've heard people talk about, not so much in Portugal, but next door in Spain and France, about usufructs. Are you familiar with those arrangements?
According to the law, if you donate and try to breach mandatory rules because you anticipate the transfer of the assets, it shouldn't work. In some cases, the assets that, let's say you donate, you have two kids. One of them is your favorite and you don't like the other as much.
Yeah.
Just obviously kidding, but let's say it's something like that. You can if you donate to your favorite kid during your life, the asset that you've donated should be considered for the purposes of inheritance as well. So you had 1 billion of assets. You donate 100 in life, 900 left. That asset should be considered when you split the assets between the two heirs. Right? This is from a theoretical standpoint. From a practical standpoint, I don't record this now, but I would say that I'm just kidding. From a practical standpoint, I would say that in some cases it should be harder to demonstrate that the assets were transferred. So if it is real estate, it's easy to detect. But if it is, let's say, something which is more easily hide easily, maybe it's going to be escape. Other things that sometimes I've seen people using is companies and other like insurance wrappers or stuff like that. Because if you have assets within a company, then the rules that will govern the company are other sorts of rules. There, I think, is also case law on people trying to. We have obviously the abuse doctrine. So if you abuse legal forms to reach an outcome that is not desired by the law, you can just support a claim based on abuse of right. But the law is theirs, but sometimes this takes a long time in courts, I would say, and proof, sometimes it's difficult to.
Right. So life insurance wrappers are something that, I mean, of course, it's a specialist topic, but perhaps it would be of interest to someone who's interested in that space. PPLIs, life insurance wrappers.
Yep. I've listening to. Yeah, insurance wrappers is something that is used for estate planning, as you know, in other places in Portugal as well. But there is obviously all sorts of considerations. This is an expert topic, as you say, but then you have to consider the risk of losing your assets because of insolvency of the insurance, stuff like that.
Yes, exactly. So there's no perfect solution, but
there's no perfect
options to consider.
Don't put all assets in the same basket, right?
Yeah, absolutely.
So if you're a 6, 7, or 8-figure investor, entrepreneur, or business owner who needs a tailor-made solution from a qualified team of professionals, we can help you achieve the international lifestyle, the freedom, and even the tax savings you're looking for. Visit us at htj.tax and live that international life.